Hey traders, welcome back to the channel. In this video, we're going to talk about Clover Health Investments, ticker symbol CLOV, after a pretty disappointing day. In pre-market, there was a lot of anticipation leading up to earnings. We were all the way up to 850 in pre-market, up over 10%. And then by the end of the day, we are down almost 10%. And so we're going to talk about what happened. We're going to break down those earnings and then some sketchy stuff that was happening on the side of earnings, a downgrade from Bank of America and a short report from Hindenburg Research. We're going to go over all of that, but then we're going to really focus on the chart, breaking down key levels and key indicators so we know what to expect moving forward. Without any further ado, let's hop right into the analysis. So we're going to start off by taking a look at the earnings report that came out in pre-market today, both negative and positive takeaways here. Starting on the positive side, as we can see right here, Clover Health reported revenue in the first quarter of $200.3 million. This reflects a 21% increase year over year, and it blew past the Wall Street consensus revenue estimate of $166.2 million. That is a monster beat. That is clearly very positive. However, the company also announced a net loss in the first quarter of $48.4 million, and it generated a Q1 adjusted earnings loss of $76.2 million. Well, this is clearly negative. It's not the end of the world, and it is by no means what caused this stock price to plummet today. In fact, there were some other very sketchy reasons that caused this that are summed up in this article right here. As we can see, the first of these reasons was that the Bank of America cut the company to neutral from buy, saying that the growth outlook was disappointing, and it cut its price target to $9 from $15. When we take a look at institutional ownership a little bit later in this video, you're going to see exactly why this is very, very sketchy behavior from the Bank of America. And as soon as Hindenburg Research got a hold of this downgrade, they decided to hop onto the train and start creating more fear, hoping to get some more panic selling from investors, and it worked. The Hindenburg Research is the research group that released the short report in early February, and they decided that today, just a few minutes after this Bank of America downgrade, was the perfect time to tweet out pretty much nothing other than just reiterating their points that there may have been some misconstrued numbers from CLOV in February. This is all still under investigation by the SEC, so we don't know whether this is BS or whether they may be onto something. However, the timing of this tweet is clearly very, very sketchy, and taking a look at the chart just confirms it. Taking a look at the daily price action, we did start off down, but earnings were so-so. So, this really could have swung either way, and it actually started to swing to the upside. Buyers were interested in CLOV at these levels, and we actually started forming a little pattern here, thinking that maybe we could break out of this 780 zone and start flying to new highs. But unfortunately, right here is exactly when that Bank of America downgrade happened. And then the Hindenburg tweet happened. And in minutes, we went from being in the 770s range to the $7 range. And after that, it was just pretty much over for CLOV for the day. We just trended all the way down to 660, new all-time lows, before kind of rebounding a little bit heading into the end of the day. But it is very unfortunate. If we kind of broke upwards of this pennant, who knew how high it could go? But yeah, this was just kind of perfect timing executed by the Bank of America and Hindenburg. And as a result, we are currently closing at all-time lows. And things look pretty bearish on the chart looking at the technical indicators. I'm only going to go over the VWAP. As you can see, we're below the VWAP. That means the bears are in control heading into tomorrow's trading session. There's no point in taking a look at moving averages because obviously when you close at all-time lows, you are sitting below every single moving average. So it's going to tell you that you are in bearish territory. However, instead, let's just focus on identifying the key support and resistance levels. There is only one support level that you need to keep in mind. It's right here at 660. This was the low point for the day and also just the overall low point for CLOV. And so it's an interesting point because what you can do if you are looking to go long on the stock is you can try to buy as close to this point as possible, and by doing so, that if we do break below it, you can cut your losses right away and have a very minimized risk. But if this does end up holding and we do like double bottom here, then all you have is upside ahead. So it's very, very low risk, high reward buying range right here at the 660s level if we do go to retest it. If things start to shift for CLOV tomorrow and we start going up, then we have resistance levels. The next ones we're going to have is first at this whole psychological number of 7. After that, 727, that's a historical resistance. And 780 is also historical resistance. And it also acted as resistance today, as you can see it right there. So once we get above those levels, then things are going to start to trend a little bit more bullish. We're going to get above some of the shorter term moving averages, and I will be happily able to make an update video once that happens. But for now, just keep in mind, be careful for this range, because if it does fall below, we don't know where it could go next. There's no essential floor for this. However, if you do buy around here and it does rebound, you're looking at very, very good upside. So, two different ways to play it there. So the last thing we're going to do, since there's not really much going on here with the chart, is to take a look at the institutional ownership. And this is something that's going to be of interest to those who are bullish on the stock. We have seen so many different institutions filing 13Fs over the last few days, buying into CLOV at these cheap levels. These institutions aren't trying to throw away money. They know what they're doing. They know what they're getting into. They're privy to certain information. This is a very positive sign and will hopefully settle some nerves if you are long on this stock. We have just seen institution after institution filing these 13Fs, picking up shares for the cheap. But now I want to point your attention to one specific institution. The reason being that Bank of America was the institution that also today came out with that downgraded price target. It caused the sell-off. And as we can see right here, this past Friday, they also bought puts on CLOV. This is why I was so sketched out by the price action today. It clearly seemed manipulated. Bank of America had a vested interest in seeing CLOV price go down so that their puts could print money. This is something that, as a market as a whole, we've been seeing this manipulation kind of ramp up over the past couple of months. And it's truly disgusting. But this is just as kind of apparent as it gets. And hopefully once they cover their puts and everybody who they're in cahoots with covers their puts, we can start seeing this stock start to move naturally and start seeing it go back in the right direction. Let me know if you agree with my analysis, if you disagree, if you think we are going to start to rebound, or if you think there's more downside ahead. If you have any questions, let me know. If you like this video, leave a thumbs up and subscribe to the channel if you want to see more content just like this. Aside from that, have a great rest of your night.